Hello and welcome to this special episode of Prinsights Global Spotlight. Well, I'm so happy to be joined today by a man who is such an expert in silver and has been for such a long time, John Forrest Little. He's also the creator and author of the Silver Academy, which is a fabulous Substack. If you have not seen it or read it, you should subscribe. It is really a fascinating set of information and very, very intense in terms of how prolific John is. John, thank you so much for making the time to join us here today.
Yeah, it's totally my honor. I'm sort of a big fan of you, following you through Kitco, Palisades Gold, Daniela's show. So if I appear nervous, studio audience, just know that I'm very honored to be here.
Well, I appreciate you, John. And, for those of viewing or listening today that don't know as much about your Substack, the type of deep analysis you do, how you go about it, and your background, could you give us a little bit of expansion on all of that?
Yeah, I started in the clay mining business and worked there for 17 years. It's similar really to any mining. You pretty much had a mess. I talked to architects, and they were in the Southwest. They were building structures with, 2x4s and sheathing and stucco. And we tried to get the message across, like almost like the Three Little Pigs, that if you build a house of straw, it's going to blow away. And so all of a sudden, I started knocking down some military bases. Unfortunately, some of them shouldn't be there. College campuses. With the idea that once you put that brick in the wall, not only you can walk away, there's no maintenance. You may spend a little more on the front end, but you're also getting the benefits of the thermal lag. Your house is warmer in the winter, cooler in the summer, and your resale value is incredible. So similar to gold and silver, it comes from the earth, it's tangible, and you're still brick buildings standing from the first century in Germany, Rome, Spain, etc. So then I was hired by David Morgan. I'd had a website called The Pickaxe. And the idea was, and I've always been studying politics at some very prestigious universities with under the lens that the ruling class has always treated the villagers very poorly. So it's time to strike back. So it had double meaning, the pickaxe, mining silver and gold. And it also had this social commentary. And that's why I started stacking, because of my lack of faith in traditional financialized instruments, banks, retirement funds, and things of that nature. So then I thought, in our world, there's not one daily news publication that focuses on silver. So maybe I just got lucky and decided I would fill that void. And then just through, I have an obsessive nature that's sort of a mental illness almost, to have this OCD. But if you have a mental illness of that nature, you might as well convert it into something positive, and fixate on markets and geopolitical risk. And lately, I've been very critical of the tariff turmoil and some of what I'm seeing that looks like martial law. All those things are extremely bullish for gold and silver, but can be create a lot of havoc and stress for the villagers. And most of them have never heard of silver and gold. They don't even remember that I'm holding 1964 Lincoln. They were 90% silver. And back then, right when I was born, actually, in 63, 64, it was only $10. And today we're approaching $400. So that shows you, did silver get any better? Is it still same ductility, same malleability, same reflective properties, same thermal properties? But silver didn't get any better. It's on the periodic chart of elements, number 47. And it's the fiat, it's the paper debt note that the Federal Reserve shoves down our throat. And we've seen that in history, where the ruling class colludes with bankers, always to fund wars, and issue paper substitutes for silver and gold. And then the villagers are ravaged with inflation. So that's sort of a theme that has repeated since the Peloponnesian War, Athens versus Sparta. And I'm not going to tell you all who won that one. I'm not telling.
Read your Substack. I know that you get heavy into history, and what I really appreciate in terms of your work and your background is that you really have melded it, for want of a word that actually describes what we also do with physical metals, it together over the years, and you do have a very regular, very prolific set of information that comes through the Silver Academy. And right now, of course, we're facing, as you mentioned, so much uncertainty and instability across so many different avenues, as well as the degradation of the value of fiat currency and increase in debt. And we have silver now peaking up towards, not yet there, but as we speak now, towards 2011 highs relative to the dollar. And gold, of course, has been skyrocketing upward past, as we speak, $4,000 per ounce. So just focusing on silver, where it's at now and where you think it can go in terms of the current tailwinds that you're seeing and that you're writing about on a regular basis.
Yeah, I'm going to make this call and I'm going to call it a guarantee. The best way to look at silver being very early still, you have to remember all the forces that have been out there forever fighting silver as money, usually because a constrained monetary system would prevent politicians from going on their crazy adventures. So if you just take silver relative to M2 money supply, adjusted for that, silver would be about $675 an ounce. And we're going to cross 50 by tomorrow, probably. We're nowhere near an all-time high. And so that's just common sense. But if you take the all-time highs that we saw in 2011 and before that quick blip on the radar, back then silver wasn't really in shortage like we have now. So amid the sixth straight consecutive year where miners are lucky collectively, everyone in the world, to get out 830 million ounces per year. It's not like that productivity is going up like we see oil, for instance, can go up. Gold is sort of the perfect form of money because there's 6.8 billion ounces above ground and new inventory arriving is about 1% of that. So, and the silver story is very unique because amid this shrinking, dwindling supply and decreasing ore grade in risky jurisdictions, the cost of production was too close to the spot price. Now we're seeing that there's some wiggle room in that. Sorry, I should have turned off that phone. It's gone. Back to your question, though. Now we have the soaring industrial demand, especially with military, aerospace. Again, the physical properties of silver yield the best conductivity. And if you're going to send a rocket into space or a torpedo submerged in the ocean, you cannot use a lithium ion battery because the humidity, remember those videos you would see of a hurricane in Texas and Tesla's on fire? So imagine the silver zinc battery is the best battery. And some of these have 11,000 ounces in them. I've shown pictures of the battery, sort of the anatomy of the battery. They're just massive. But they're required because in a military setting, you need that energy density. So silver could be used as another word as energy or the conduit of energy. So now take AI data centers. Basically, it's putting a huge strain on the power grid. So data centers are also usually have their little solar farm next to it. And silver cannot be substituted out of a solar panel. They're trying to do it each week. I read a newsletter of like, we think we made some progress, but you need the best conductivity and you also need the best reflectivity. And the ductility basically means that you can take an ounce of silver and stretch it into a wire 2 or 3 miles long. It'd be a very thin wire, but you can do that. And malleability speaks to its ability just to take like a shapeshifter, for example. The only element that has better malleability would be gold, where you can pound with a hammer on 1 ounce of gold and create over 300 square feet of what they call gold leaf. which you see on domes and churches and even in paintings. Anyway, back to the silver demand. We've never seen demand this high. And I'm not even talking about Samsung's new product. It's their silver solid state battery. And it was just sort of this prototype as of last year, but now it's deployed for 2026, giving your electric vehicle, instead of 350 miles range, now you have 700. So it doubles the range, doubles the lifespan of the battery. Who doesn't want it? I mean, I know people that have Teslas and they go, oh, I guess the bad news is in 7 years, I got to buy a $15,000 battery. I mean, so why wouldn't you want to double the lifespan? And then most importantly, or equally important, is instead of waiting 25 minutes for it to fill up on a charge, they cut that in half and it's lighter. So once we see in the marketplace a better mousetrap, you get full adoption. I've seen some people speculate, well, even if 10% of the people go for this, it's like, no, everyone's going to go for it. And it uses a kilogram of silver per car. If you do the math on that, it just blows solar use out of the water. It'll look like child's play. So now we have AI, military, aerospace, solar, the new Samsung battery. And the Oriental Ghost, one of the best guys to follow on Twitter, is talking about 40,000 companies in China that rely on silver in their supply chain. So they're going to buy it at any price. You can double the price of the silver and it does little to affect the end price of the product. We would tell the architects that. They're going, yeah, but your brick, oh my God, it's $17 a square foot. And we'd say, if you double that, you've just increased the entire building cost by less than 1%. So there's really no one to worry about. I don't see any scenario where silver doesn't hit that adjusted for money supply all-time high of 650. Will it do it this year? No. There'll be another shenanigan. There'll be banks. I'd say they're the cartel banking syndicate that tries to, right now, I think I penned an article yesterday where there's 379 people all claiming they have that same silver. And please. And that's a good way to smash the price down. You make it look like silver is selling off, but these are what are called derivatives. And I think you're going to want to hold it yourself. Like our good friend Lynette Zhang says, if you don't hold it, you don't own it. She's the best. And sometimes we need to hear a refrain in our below average brains so they can become fundamentals, right? What was your passion as a child, Nomi?
Math, actually.
Oh yeah, that's right. You're
Yeah,
Dr. Prince. I forgot about that. Go
well,
ahead with your.
it's interesting because we talk about silver's physical, obviously, and there are so many as you've just gone through a litany of tailwinds towards the demand side of silver that's going to pull prices up, and it's going to basically entail the buyers, industrial, governmental, etc., to get physical silver, of which there's a limited supply, and it takes a long time to create a mine site with high grade silver that can be produced and utilized. So if you take a look at the math of that, as you asked about my background, and you've been talking about, some of these numbers, how do you look at the dearth of supply that's out there? And are there particular jurisdictions that are currently producing and will likely produce more for different reasons? Are there ones popping up? Where do you see that, or any part of that gap in demand and supply being moved the most?
Boy, that is a great question. I like especially that you brought up the dearth. Is for those in the studio audience, that means a severe lack of. I just love that word. And that is you hit the nail on the head, because I think I forgot Simon Michau. He's out of, I think he's from the Netherlands. He says 1 out of 2,000 mines will become an operating mine. And it often takes 15, 20 years. And of that, so if you make it to the finish line there, then 30% of those failed for economic reasons. With ore grades declining, we used to be able to see that you and I could get a wheelbarrow and a pickaxe and follow a vein in Idaho or Nevada or New Mexico. And with our little team, out of a ton of raw materials, we could probably get 40 ounces of silver. Now the metrics on that recovery, or what we call the yield, is down to less than 2 ounces. So as ore grades decline, and because there's been no new significant silver discoveries and a massive underinvestment as well, I'm looking at, everybody looks at count: Chile, Argentina, Mexico, Peru. But I put two M's in there, and you got to shout out Morocco, because that discovery in the Z grounder discovery is very, very important, because that is not silver as a byproduct. It's a pure silver play. So that's the first thing investors would want to do, is make sure that you don't want to be sort of tethered to an industrial metal like zinc or lead or tin or even copper. You want a pure silver play, and you want it to be in a jurisdiction. I have written a lot about that, with Mexico nationalizing lithium in 2022, then electricity in 2023. Even if it's a slow march towards silver, because the Morena Party says the mineral resources belong to the people, it doesn't matter if it nationalizes or not. If they're harassing, if the climate there is just nasty, I mean, just from labor relations, from community, Claudia, the new president, said no new mining concessions, period. They're always going to use the word for environmental restoration, but it's also a way to sort of go out there and say, maybe if you give the government, we got these expensive socialized medicine now, socialized education, we're universal pensions. If you could help us out with that, maybe we can let you operate for another year. There's sort of that's sort of the culture in Mexico, is you sort of negotiate, and you don't use lawyers. You show up, and you may use a strong man, or get the community fired up. So if you take Mexico off the map, now we're looking at Peru and Bolivia as probably your strongest jurisdiction, because they've already nationalized. And the miner there that does the best is the one that has figured out, I'm just going to be the silver oxide smelter, and works with over 20,000 artisanal miners. And if silver's lower in price, they get paid a little less. And there's a sliding scale. As they get, silver goes up, they get paid a little more. And none of them work for the company. They're all independent businessmen, and the jurisdiction risk has already been removed. So that's a great jurisdiction. And according to Ross Beatty, he owns, or CEO of Equinox Gold, he said it's been their strongest jurisdiction. And then, of course, Canada is strong, but there's not an operating silver mine, but there's some getting close, maybe 9 years out. And then U.S. is strong. Most of the good silver mines, the only reason they shut down in Nevada and New Mexico, specifically in Idaho, is because World War I came, World War II, and the price of silver was like $1, and the men had to go fight another adventure for the king. So that's silver. There's still a lot of juice to squeeze there in Mogollon, Nuevo Mexico, in Tonopah, which is a prolific district. So the challenge is, will the plebeians wake up and stop chasing Netflix? What has more value, silver or being entertained in binge watching? And it's funny, the Magnificent Seven is just full of fluff. Most of those companies didn't even exist 20 years ago, and really don't provide any sort of, with the exception of Apple, they make some things, but the others are just entertainment services. And I remember the world was getting ugly when I started seeing like halftime show. I follow football and golf, and it used to be for products like, Gillette razor, or Procter and Gamble would roll out some cleaning products. And now it's like, this halftime show brought to you by Shrek movie, 2. So what? How is that? There's no value in entertainment. Rome found that it works great, though, to distract the villagers with the famous bread and circuses. So the S&P 500 is held up by 7 stocks that are specialized in circuses. I'd rather have the tangible thing. I'd rather have the real thing.
Yeah, it's interesting. We actually just had a sort of piece about that that very thing. There is a big difference between what's real and what's overvalued. And what's real also has finite supply, as we were just talking about, and that makes it more valuable amongst all of the other factors that you've been talking about. This is fascinating. I'm really glad we got a chance to have this conversation, and I hope to have many more as silver continues its trajectory upward. And on that, just before we close, there's people watching today or listening that haven't made that foray into silver investing, whether it's in the physical coins or whether it's in particular miners or what have you, and think that maybe with silver up near $50 an ounce, they may have missed their upside potential. So in closing, I know you have particular ideas on allocations of a portfolio relative to commodities and silver, but if you could just give a couple of pieces of advice to those investors on the fence or who just dip their toes in, what they can do or what they should be considering.
Yeah, I'd say first thing is to sort of zoom yourself out and look at the macro picture with $37 trillion debt, what it costs to service that debt, and then look at maybe a history of maybe even go back to the great financial collapse of 2007, 8, and 9, and look at what banks' unrealized losses were then compared to now. The magnitude, since you're a mathematician, I don't have it at the top of my head, but it will be peanuts compared to today's. This is how leveraged up these bankers are. So the first step I tell people is to get your money out of the banks, except for what you need to pay, your phone bill or whatever. And then secondly, take fiat debt notes and convert them into real money. And like next week in the Pittsburgh area in Monroeville, there's going to be a coin show. And there's like 100, no, there's more than that. I think there's close to 200 little booths of local, we call them LCS, the local coin shop. Then there's also some wonderful, well-known names. I'm not going to drop any names, but you want to buy silver first because I don't think a new investor needs to just part with $4,000 to buy one coin. But anyone can come up with $50 and do it every month, just like you'd be disciplined enough to join the gym or other things. And I need to hit the gym more often. But that's the sort of discipline it takes to save in real wealth. And then as far as the miners go, I look at it this way, that gold is sort of the leverage play on the dollar. Silver is the leverage play on gold. And then miners are on the leverage play on the metals. So let your risk tolerance be your guide, and try to get a pretty healthy distribution of, I'd say, most in physical, but maybe 40% in miners. And when you pick the miner, go with those things we talked about, which is them being a pure silver play.
That
There,
is fantastic information. And I really, again, I hope we can continue this conversation in the future. I think you've been really so very clear in the amount of time we've had on the evolution of silver, where it's going, why it's going there, and how to take advantage of that as an investor to the asset class, new or seasoned, really. So I appreciate you, John. I really thank you for coming on here. For everybody watching here today or listening, go check out the Silver Academy. We'll have the links here as well when we send out this interview. It's really worth your while. And John, again, thank you so much for your time and for all of the work that you do.
You know me, it's totally been my honor. We'll do it again. And I'm going to put you on the spot. Would you come on my podcast? Maybe
Sure.
some. There we go.
Put it up.
And I want to say good luck to the studio audience and stay positive and take control. As Voltaire said in the 1600s, when life is a shipwreck, sing in the lifeboats.
Very, very good. And for those of you out there, thank you so much for tuning in to this special episode of Prinsights Global Spotlight.